Howdy, friends. Steve DePoe here with the Rose Realty team with this week's real estate vlog for North Texas. Today's topic, I changed it from what I thought it was going to be last week. Today, we're going to talk about building wealth after your first home. Now, this applies to basically any of us, but those of you who are maybe first-time home buyers, or maybe even not your first home, but you may be sort of on the younger side. These are some ideas to continue or to start building wealth after you've made that first home purchase. So let's get into it. Build a home emergency fund. Good idea for any of us, right? We want to put money aside for a home emergency. The hot water heater breaks, and you have to replace that. Some of that will be covered in your homeowner's warranty, or your house insurance, and some of it won't. So you don't want to be want to be maxing out credit cards in order to fix your hot water heater or what have you. But you want to build a home emergency fund with, like several $1,000s in there, just in case something were to happen. Hey, you think about it, that's, 50, 60, $100 a month. You just stick in there and forget it. So that so again, if something were to happen, you guys would be set. Keep saving for retirement. What a lot of people do, and I got to say that probably early on in my first house, I was one of them. When I got that first house, I said, look, I'm going to need cash to pay my mortgage or to do home emergency things, or remodeling or whatever. And what I did is I kind of stopped, the savings plan for retirement. Well, so sort of a bad idea. For not the least of which is the fact that a lot of times with companies today with 401ks, that savings that you do with your 401k is pre-tax. Okay, so you're saving on your tax right there. Plus, it's building your retirement nest egg. Talk to your financial planner or talk to your accountant about about that. Build or start to build a new home budget. Look, if you're a first-time home buyer, you moved into a house and maybe isn't the house that you want. Maybe it's a little on the smaller side. Maybe it's not the neighborhood you want. Maybe it doesn't have the number of bedrooms you want. Maybe you wanted a bigger backyard. I can go on and on. But you had to kind of settle because you couldn't afford everything that you were looking for in the house, right? And so you got to start thinking about that next house. And if you start thinking about that next house and you start putting away again, a couple $100s or so every month, or so, every month, so that nest egg kind of starts to build and build. When it comes time for you to say, hey, we're out of here, we want to get another house. Number one, you'll have equity built up in your current house that you won't be able to necessarily tap into until you get to until you sell it. But if you'll have that equity build up. And number two, if you have this sort of new home budget or new home account that you created, you'll have maybe more money for a down payment. Okay, which is always good, which always means if you have a bigger down payment, then you avoid private mortgage insurance, which maybe if you're a first-time home buyer, you're paying now, and you'll be able to afford then sort of a larger monthly payment because you won't be paying PMI, and then all that you'll just benefit completely from a new home budget. Or a new home budget or an account. And then lastly, think about your life plans. So what does this mean? So, if you're 35% of of folks under 35 bought a new house or a first-time house and now are facing what's our next steps. Well, not real estate wise, but do we want to start a family? Or do we want to do this, or do we want to do that? Are we taking care of mom and dad or grandma? Okay, and those kinds of things. And we got to start thinking about our life plans and moving forward. So that may mean making sure we have life insurance. Okay, but life insurance, depending on what it is, term, whole life. Talk to your financial planner. Could benefit you in the long run or just be an expense until the day you die, right? But think of those life plans. Think about how things are going to change. If you're in that under 35 range, maybe it's starting a family. If you're over that, 50, 55 or 60 kind of range, it's retirement. And so think about what are those next steps and what do I need to get there? So if you're under 35, it's, well, maybe we need a bigger house. And it's a good idea that we started that new home account. And if you're over 60, maybe it's, well, we're going to retire and move into an active adult community or get a second home or get an RV and go get an RV to do RV. And whatever it happens to be, think about what those life plans are. Think about how you want, what it's going to take to get there. And maybe that requires a life plan budget as well. Funny how all of these plans seem to be, centered around saving money. Very interesting. Anyway, I hope that kind of was helpful to you and gave you some things to think about. Next week, home inspections. This is actually what this happens to be is the different type of home inspections that you can do. There are something like 7 or 8 home inspections you can actually do. We don't necessarily recommend every single one of them, but you can pick and choose based upon your level of the level of the house in terms of age, and maybe your sort of level of paranoia, you may want to call it. Okay, and so next week, the different kinds of home inspections. This is Steve the Poe. I'm with the Rose Realty team. I'm out.